believe it or not, we just finished reporting season. That feels like so long ago, but a good time to have another look at the earnings and dividend growth and what's going to unfold over the coming year. Marcus Bogdan, Blackmore Capital. Marcus, it seems like a long time that reporting season has been done and dusted. Overall, the economy is in good shape. At least we can take some comfort there.
Good morning. Reporting season had some really some pleasant surprises. There were definitely more upgrades than downgrades. And when we were looking at the beginning of January, when we were in the midst of Omicron, the pivot that we saw from the central banks, particularly the Fed, there was a number of concerns there. Now, all of those concerns are still there, particularly what we're also seeing in Ukraine, but earnings results season was strong, and it was led by the financials, very strong results from Macquarie, CBA, NAB, and then the commodity side and BHP delivering strong earnings growth, a much higher dividend, and so that's led to net upgrades. And importantly, if we look out to the full year of 2022, the expectation is that we're still seeing earnings growth of between 10 and 12%, so still above trend, and that's reflecting of an economy which looks stronger than anticipated.
All right, Marcus, let's drill down a little bit. We've got quite an inflationary environment out there at the moment, a bit of uncertainty, but the growth prospects still look pretty decent. Where are the value at the moment in these markets?
Well, I think one of them is in the reopening of the economy, and that is healthcare. Healthcare has been a chronic underperformer through COVID. There's been a few exceptions around pathology, but if you look at the group of healthcare companies in the last 6 months, they've dramatically underperformed the market. And I do think if we come to a sort of a more normalised period out of Omicron, the backlog for patients and for broad testing, for elective surgery, looks incredibly positive and extended over a period of time. And that's overlaid with what we're seeing in terms of ageing demographics and chronic disease. So certainly in that area in healthcare, whether it's CSL, whether it's Ramsay, they're sort of key stocks that I think will do well over the next 2 to 3 years.
So while we're getting a little bit carried away with not talking about rate hikes, inflation's not a problem for now, investors need to look past this current noise, don't they? We still have rising rates. We still have rising inflation. Pricing power is going to be key over the coming year in any sector.
It is, and so I think the emphasis has to be on quality leaders and those companies that have got the benefits of some pricing power or pass through on their contracts. Key companies that should benefit from that are companies like Amcor, Brambles, and that higher inflation environment should be beneficiary to companies like Coles and Woolworths as well. And so I think that they're a select group of companies that I think can actually navigate through higher inflation.
I want to ask you about the material and energy space, because everyone is piling in at the moment, and I mean everyone. Is that making you a bit cautious about chasing? We know that there's lots of tailwinds for the sector near term, but longer term there's still a lot of uncertainty out there.
There is, and prices have been absolutely elevated, particularly on the energy side. And so, we're still staying with the materials, company like BHP on the energy side of Santos, but with the expectation that I think those returns will moderate given how strongly that they've performed, and there could well be a pullback and volatility there. And so, whilst we think that fundamentally, medium term, and your previous guest was really an excellent synopsis around particularly the demand for metals as we decarbonise. I think those trends are absolutely there. We're increasingly looking at those sectors that have actually underperformed over the last 3 to 6 months as potential areas of putting new capital in.
Talking about in the whole reporting season, is this the last time that we won't be talking about uncertainties around COVID, supply chain? Are those risks still live over the rest of the year?
Well, I think forecasting any of that is problematic, and you've just seen how the different pivoting that we're seeing on the level of interest rates as well. We are still, COVID is still very much present in China, in New Zealand, and here as well. I think PCR testing for the healthcare sector will be here for a considerable amount of time, and I don't think there's any sort of short-term panaceas in terms of supply chain. So plenty of challenges, but I think the underlying theme is that the economy is still doing very well, and I think Australia is well positioned, particularly on the agricultural side, the energy side, and on the commodity side as well.